The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to The Weekend Podcast, joined by Paddy, Peter and Steve. If you're wondering what the noise in the background is, Steve's got his oven on, even though it's 8 a.m. in the morning. What are you cooking, Steve, 8 a.m. in the morning? Is it a croissant?
Sausages and hash browns.
Ooh, healthy!
Ooh.
Steve, you live on your own. We did say last week it's called the register, this thing, to check whether people are still alive on the podcast. You know, because you live on your own. If you fall down, you know, have you got one of those big buttons on your neck, Steve? You press and you fall over.
Yeah, I got one of them. Yeah, just in case.
Now I cooked myself with sausages and some hash browns. So you can't do that in care, Steve. Can you? You love the independence, don't you?
Yeah.
Well, it's Saturday, so I'm gonna, splash out.
Splash out.
Yeah, I think he's going to have a heart attack and fall down. That's going to be the reason.
Hey, they're vegetarian sausages, though, so they're healthy ones.
Oh, what make of they, Steve? Because some of them are like cardboard. Some of them are quite
Linda
good.
McCartney.
How does she do that? It's amazing. Anyway, coming up, boys, I got a roster here, a menu of stuff you can talk about. We got the tier test. We got Paddy's queries. Time in the market versus timing in the market. And we also got a time in the market poll, which is put out. Incompetency, I can't even say that, at the highest level. Phenomenal this week, I thought. Trends, and guess the share price game, all right? First of all, let's start with incompetency at the highest level, right? You've got AstraZeneca, the biggest company in the world, pretty much in regards to pharma companies, all right? And you've got Oxford University, probably one of the most respected universities in the world, right? They messed up on the dosage on the COVID-19. How can you mess up on the dose if you are working at Oxford and AstraZeneca? These are the best people in the world. These people, can you imagine that? Right, put half a dose in there then. No, you put it all in. No, it's half. It's 2 doses, you fool. Oh, is it? Right, separate that.
I can see how they made that mistake. I sometimes made that mistake when I'm making food and I use the tablespoon instead of the teaspoon.
I know. Steve, you're at a different level.
I know I'm a bit higher than them. Obviously,
exactly.
but...
Yeah, but you imagine coming down... At what point did they say, right, that's it, we got half now, and the boss comes around about 2 weeks later, why have we got so much vaccine left over? So he separated half for half, small dose with 2 doses in it. We've got separate vials for that, you fool. All right. Oh, we've been injecting people with this, and turns out it's working better.
It's worked out for the best, though, isn't it?
Yeah, that's really odd, isn't it? How you give a small half a dose first, a month later you give a full dose, and that the efficacy. But the thing is, the incompetency doesn't stop there, right? Because they're criticised now because they've had these 2 different levels. Now, the majority or the larger group of people were given the full dose. There's like close to 9,000 people were given 2 full doses. Only 2,741 were given the half dose first and the big dose afterwards. So in the one, they got 90% efficacy in the half dose version and 62% efficacy in the full doses versions. But they put them together and said, right, well, together that's about 70%. Because if you look at skew the figures as well, there's more people in the big full dose. It's about 70%. And some people say you can't do that. Because there's a different trial, you've used different people. In fact, in the smaller half dose, you haven't used anyone over 55. So you can't just lump them together and give an average. This is Oxford University AstraZeneca. So you realise when you see incompetence in the government, and anywhere, you think, well, if the best people in the world, in the country, the most educated, the most qualified in the world are getting it wrong, what hope do we have for humanity? But then again, so we must. I think we must expect incompetency, mustn't we? At certain levels, do you reckon?
Well, absolutely, and it's led by the politicians, surely. So yeah.
And I suppose it's the pressure as well, pressure and timing to get this out. It's a race to get the vaccine there. But it turns out it was, fortuitous. And maybe, they're doing a separate test now to check out whether that half dose is going to work out, And
then Boris wants the flag on the, doesn't he? He wants the flag on the packaging or whatever. I'm thinking, I'm not sure we do we?
That's perfect. It was messed up. We made a fortunate mistake. Boris wants his face on the front. Did very well there. But yes, that's perfect. You messed it up, but it turns out it's all good, and but it's more effective. Isn't it?
On it, that'll be it.
Yeah, exactly. And anyway, so right, what we're going to do, boys, right? I mean, this tiers we're going into next week is again has no rhyme or reason. Seemingly, there are certain places going into tier 3 like Kent, but they haven't got as many infections as Westminster. And you think, well, why is that then? It's because obviously politicians live in Westminster. So it's really odd, isn't it? Doesn't make any sense. So what I'm going to do, boys, I'm going to give you a town, city, country or area, right? And you got to say where it's from. So we'll go around, starting with Steve. Steve, you've got to tell me which tier it's in, okay?
Go on.
Good, Pete. Point for each one. And this is quite appropriate for you. Excuse me. Yeah. Isles of Scilly, Steve. Which tier? 1, 2, 3.
2.
No, it's in tier 1. It's only one of the 3 places in tier 1. Not a point for Steve. Okay, here we go. Pad. Here we go. One for you here. Oxfordshire. Tier 1, 2, 3.
2.
Yes, it is. The point for Pad. All right. Okay, here we go.
Pad got an easier one than me there.
Yeah, okay.
To be fair, Steve, Scilly is one of the famously one of the only 2 places in the country that's in tier 1. So really.
Yeah. You're playing, Steve. Okay.
What's the other one?
Pete,
Right.
yeah. Oh, you're not comparing. You're playing against each other here. Wiltshire and Swindon. Wiltshire and Swindon.
I know that one as well.
That's a Pete. Pete?
Yeah. Is that tier 2?
It is tier 2, yes, all right. Steve, another point. Come on, Steve, you get to get on the board.
Steve,
come on,
Steve.
here we go.
I need Paddy's and Pete's.
It's 33. Okay, Steve, Cornwall.
Cornwall is tier 2.
No! Oh, there's tears coming from Steve now. He's losing 2 down. No, see, that's tier 1 again. It's one of the only one. There's only one more thing. All right,
It's right next to the Scilly Isles. You see,
Paddy. Rutland.
Tricky.
I reckon that's tier 3.
It's tier 2. Oh, dropped a point from Pad. This could take you into the lead, Pete, if you get this.
Okay, I'm excited.
Oh, I'm going to find a tricky one here, I think. Let's have a look. All right, there you go. Blackpool. Ooh, Blackpool.
It's got to be tier 3.
It is tier 3, the Dirty Northerners, yes. Up there with the Dirty Northerners, yes, that's
Okay,
right.
right.
It is funny how the North are just in tier. It's almost like this South-North divide exists. And it always.
Again,
I know.
wonder why, yeah.
Okay, come on, Steve. Come on, here we go. Steve. Isle of Wight.
Tier 1.
Yes! Steve's off the mark, yes! So what's the score now? Hang on, so what's the score? You got 1 for Pad, is it? No, is it 2 for Pad?
Fine.
Is anyone keeping scores? I know it's very dramatic. Okay.
Does anyone care?
I think I won.
I think I'm winning.
Okay, well done. Yeah, well, one more round and through here. Right.
Hold on. Start with Steve. This is the final round. He's had his final go.
Yeah, so it's final round. Okay. Bracknell Forest. That's bad. Bracknell Forest.
Bracknell Forest?
Yes, the Forest of Bracknell.
I don't know where Bracknell is. Tier 2.
It is T2. Well on Pad. You're on 2 there. Two points. And Pete for the win. Brighton Hove.
That's got to be tier 2.
It is T2. Well on Pete.
Yeah.
Give a round of applause, ladies and gentlemen. Pete is the winner of the tier game. The rest are in tears.
Great game, guys.
Yes.
Thanks for coming.
He's in tears of joy. They're in tears of sadness. Lovely. Well done.
Excellent. Right. Is that it?
That's it. Good night.
Well done, guys.
Today's
See you later.
podcast. Bye.
That's it, there you go. Do you want to see this poll? I thought this poll was quite interesting.
Is this about stocks and shares?
This is on the stock and shares now, yeah.
Oh, okay.
So I couldn't get the wording of this right. Sometimes I'm thinking a bit dyslexic. Couldn't get the wording right. So I asked Pete, and Pete came out. What is the longest length of time you've continuously held shares in a single company for? And I said, feel free to let me know. What was it? And the return. And oddly, some people told me what it was, the companies they held. And either they were largely down massively, like 90-odd%, or massively up. So there's no in between. But people who held a share less than 1 year, 16%. People who held a share more than 10 years, 10%. So the majority of held shares between 1 and 5 years, no surprise, 53%. Half the people who took part in this, and 600 people took part, pretty much. Between 5 and 10 years, 18%. But over 10 years, that's a long time. I think. Do you know what I want to do? Right? I had someone ask me saying. He emailed me saying, Justin, when are you going to start top slicing Escape Hunt? Because I'm a bit worried, you're going to start pushing the price down if you start selling. And I said, I'm not going to start selling it for a long time. I do.
Us.
Yeah. No, I do believe it's a company that has sustainable rise happening, and I can see they've got a roadmap to £1. I said, I'm in now at a decent level on a good business, and I own a nice little chunk of the business. I'm happy to hold, and I think that's.
I've done that before, though.
I haven't done that. I've had Polarian for how many years now? But 17 years I've had Polarian.
What was the one that you where it was up and then you sold and that made it go down? Feedback.
Oh, was it feedback? Yeah, maybe. But no, sometimes but you have to look at it. Companies that are sustainable and stuff, and whether they can rise. And of course, there are lots of resource stock. Like I said, I've been looking over the last 2 years, always evolving strategy. But I've been looking last year to invest in companies that are going to have a sustainable rises. And it's largely a learning curve, because when I first came into micro caps and small caps, I didn't really know the difference between a resource company and a company generating revenue or heading towards profits. And there's a massive difference. Even though a resource company, like I said, has lots of stuff in the ground, maybe, like lots of copper that's undug, but there's been little samples of it saying, oh, we got lots of copper down there. Whoa! Isn't it amazing? Very few drill results are very, very poor. There's always a good couple of results somewhere, but oh, look this, and then they do it, they knock up a kind of financial model around it to PFS or whatever, and they say this is how much is down there, we got billions down there, and the share price goes bananas. They realise, actually, to realise that value in the ground will take a long time and it take lots of funding, and so what you do is get a pop and drop in the share price. You get the excitement and the potential and the hype and hope of that, the value in the ground. Then you realise, well, hang on a sec, they're not going to get that for like 15 years or 10 years, or if ever. I think it's like less than 3% of exploration companies listed actually get to become a producer. So the chances of getting out are very slim. And then you get all the pumpers on Twitter saying, yeah, it's going to the moon, and then they jump out. In fact, I was called a pump and dumper. This person just called me pump. I blocked them a while back, but I thought to pump and dump, you have to be promoting a stock and then selling it. So I maybe promote stocks, I maybe share the benefits of an investment with people, but I don't dump it. So all I'm doing is just basically sharing the benefits. So the difference if you to pump and dump, you have to dump as well after you pump. I haven't dumped.
Yeah.
I've just maybe pumped, but I haven't dumped.
Okay, sorry.
The dump is missing from the pump, isn't it? You've got to have a dump and pump to be a pump and dumper. So,
yeah.
And who doesn't talk about their stocks, favourably anyway? Apart from Paddy. Apart from Paddy, Paddy knocks his own stocks. So, in fact,
It's realistic.
Yeah. But do it quietly in your head. Yeah, not out loud. So,
what was your motivation for putting that Twitter poll out about how long?
Well, I want to hold. Listen, again, week 3, I've done no trades. I say no trades. I've done no sells. Right. I did buy one share in a company that's exposed to EV because it's way overpriced. I try to keep an eye on it, but it's way overpriced, and I'm happy for it to leave.
Why did you buy just one share? You said that on the WhatsApp group.
I know, because I'm testing a new formula.
Right. Okay.
No, because I want to, because when you own a stock, doesn't matter how much you keep it out and you put it into your watch list. On Vox, for example, I have about 4 watch lists. I have watch lists, EV. I've set up a filter for that. So now that one's moved into my actual owned watch list, and it's got so within the EV space. That is one of the biggest macro trends that we're ever going to see. We talk about trends happening every day. COVID test stocks. That's a very small trend. It's going to happen over a year, probably a year and a half. But the biggest macro trend ever to happen, when you see every government in the world pretty much saying no more petrol and diesel after 2030, it's a huge, massive uplift for EV, and that's going to be around for years and years and years. So we've got to get exposure to that. And I'm looking at my stocks, and I've got exposure to many different sectors: tech, property, sort of esports, med tech. So, but I don't have exposure to EV, and I don't really want to explorer or miner because they can be a pop and drop if they're not towards things. So I just want to get with that. But I want to hold these stocks as long as I've done no sells. I'm holding on to everything.
But can I just go back?
Yeah, go on.
I can't see the point of buying one share, and we're not talking about a Tesla where it's $300 a share or whatever. We're talking about a small company. I don't understand why you're buying one share.
Because I look at my share prices, which is a bad thing, too much. Okay, I don't know how often you check your share prices, but how often do you look at yours? Would you say
3 times an hour?
Yeah, probably.
No,
3 times a day.
I'm kidding.
Yeah, I'll look at it in the morning and then forget about it.
Yeah,
really,
and then cry at night when it closes.
Yeah,
no, I look at it a couple of times a day, probably.
No, I'm just dealing with that. I look at it all the time, pretty much. So it's always in my mind. I'm looking at it. So that's right. It's front of screen. It's front of forehead, front of mind. If I own a stock, it's in my. I only own 6 stocks now, 7 now. But I mean, there's nowhere near. I wouldn't buy any more at this level because it's rallied ridiculously. But so I own that, and it's always there. And I'm always going to. I own a bit of it. It's more important to me than stocks I don't own. That's why. And so, I really like it. If the share price doesn't come back, though, I'm not going to buy any more because I realise the share price is everything. And if you want to make money in stocks and shares, it's everything. You've got to buy at the right level. And it's not at the right level. And so, and I'm happy to miss out and find something else. So there'll be other opportunities. That's one thing in the market. The fear of missing out is what destroys most people's potential to earn money in the market. You mustn't have fear of missing out. You must realise there's another one along every now and again, So, So essentially, I want to hold as many... And this poll is basically based on... I want to see who has held what for how long and what has been the result. And, of course, the difference, I think, in a lot of stocks, generally, is if you're holding a company that's nowhere near value generation, and by that I mean cash generation, then the share price is going to go down, unless it's hyped and hyped and hyped and hyped, or it's in an industry that's, very hyped. But generally, they will not sustain a rise, and that's why I'm looking for sustainable rise. And I believe every stock I own at the moment has within it a sustainable rise, and I think by owning them for years rather than just months, then I'll do better and better, and I don't have to do too much. It's very hard to do nothing, though, isn't it?
Well, as you've already said a few weeks ago, 26 years or something to be 100 bagger or whatever the average.
Well, that's part of the reason, my inspiration for this. I made many mistakes by selling out early. And the stock has risen further and further, and I thought, why? And just impatience, having to do something has spoiled my return on the company. And because as humans, we are wired, we got neurons, billions of neurons firing every second. So we are sort of a moving mass. And it's hard to sit and do nothing and relax. That's why they say, meditation is good for you. Do you not think
that's just part of your personality, and you're not really going to change it? You just tend to change things in life generally every month.
You can change habits, so you can change habits, I think. I know people who overtrade all the time, and you get any bit of bad news. Listen, right, I said, investing is risky, right? The course of business never runs smooth. A nice little analogy here for you guys. Imagine we're on a bus. In fact, I'll give a real-life story. Years ago, when I used to go to Cath, years ago, we went on holidays.
Cath.
Yeah, we went on holidays. Was it Lanzarote somewhere? And we in this hotel, and it was quite busy, didn't like it. And so I asked the guy on the reception, I said, is there any nice beaches, quiet beaches around? We can, and he said, oh, yeah, it's not busy, but the beach was down here. And he said, he said, I don't know why he was French. He was in Lanzarote. He was a receptionist there.
Inspector Clouseau, wasn't it?
Yeah, Inspector Clouseau. I was like, you should know. You should know when it could be. That's sweet. And so he told us where this beach was. He'd get up early in the morning. It was off a beaten track, right? And so we literally, I had a car anyway, off a beaten track. We got up early in the morning, and we went off the beaten track down this thing, and it was really bumpy. And I thought, is it worth it? And we were taking the wrong turn in. I'm sure, so we came off the road, and it wasn't the proper road. And it was bumping around this little Fiat Panda we had, I think. It was bumping around, and it really was not a nice drive. And we thought, we'd gone the wrong way. And this is like investing sometimes, You can see what you want to achieve. You're bumping around. You're thinking, where the heck are we going? Are we on course?
And then we fall off a cliff.
Are we on course? Exactly. Sometimes you will take the wrong turn in stocks and fall off a cliff. And the share price won't recover, And that's why it's good to have diversity. I don't know how you have a separate car. I don't know how it works in this analogy. Diversity, separate car with clones of yourself. No, so anyway, bumping along. We were going to turn round and go back, and thought, no, this is wrong. But in the end, it opened up in front of us. This gorgeous little beach, no one on it. Almost the sea, sun, golden sun, golden sea, and golden sun. Everything's golden. And we just got there. We were only on the beach, so we sat down. And we had a late night before, so we just both nodded off. And we were on the beach. No one was on the beach, like an alcove. And I woke up, and I saw this big lady standing just at the water's edge, bending over, and seemingly had hairy bikini bottoms on. And I thought, what the heck is that? Big German lady she was. One of those, the big German ladies, you see them, they carry steins of lager, for 20 of them. But I said to Kath, it's a lady over there, either she's got furry bikini on, or she's bending over and she's got nothing on her bottoms. And Kath looked up and said, yeah, there's a bloke over there naked as well. I said, what? So we looked round, turns out this beach was a naked beach. And we'd been the first to arrive there, we didn't know that. And everyone around, I felt overdressed in my Speedos. So I just thought, okay. So anyway, I've gone off the analogy there, but what I'm saying... What's
the equivalent of stocks and shares?
Yeah, what I'm saying is,
German lady.
It doesn't run smoothly. If you want reward, it comes with risk. Now, sometimes some people would turn the car around there on that bumpy track and said, "No, it's not the right way," and then gone somewhere else and maybe taken another route. And But you can't have, like I've learned, you'd have measured risks. There's certain risks you have to take on that you think, okay, I think that's a certain amount of risk there. But other risks I won't now take on. I won't take on wildcat oil drills, because they're too risky, or clinical phase 1 studies, because because it's too risky to get through that. And I know that. I know the risks. But there are certain risks. For example, Salt Lake Potash, perfect example,
yes.
Right? Now, we all thought it was all done and dusted, fully signed off, fully funded, and it is. But there's what's called a financial close, which we didn't know about. And basically, you have to adhere to certain conditions, and when you tick off all these conditions, and so it's a difference. They loan you money, of course, on the model, the BFS, the banking feasibility study, and it's a very detailed document, thousands of pages long, and the funding company will lend you money on this. Then you start going into operations, you start building stuff and putting stuff together. If you look at Salt Lake Potash, it's 80% complete, pretty much, on the ground, the operations. They are now harvesting the salts. So they actually have a stockpile of the salts, which they'll process, and they make it water-soluble, sort of fertilizer, all kinds of fertilizer. So they're almost in operation. And now they're in operation, the funders come along, and they check out exactly how the real life matches up to the document, the financial model. And of course, there's going to be some discrepancy somewhere in your favour, somewhere not in your favour. And that's what's happened, apparently, with Salt Lake Potash. So the financial close is taking a bit longer than they thought. They thought it would be done by end of November. They think it's going to drag into December. So what they need, and there's loads of risks involved in these. And like I said, if you look through the document there, if you look through, in fact, their 5th of August RNS, there'll be lots of risks in there. They'll say the known risks, and they'll go through it. And this is anything from weather conditions to COVID risk to financial foreign exchange risks, of course. And in fact, in the moment, the American dollar is going down, and all commodities are denoted in American dollars, and Australian dollars going up. So that's changed a bit as well. So everything's changed, and that's why it's dragged on, taking longer than I thought. And people started throwing their toys at the pram when Salt Lake Potash, had a trading halt, saying, "Oh, Tony has lied. He's a fraud." It's like, and I thought, well, calm down. From what I know of Tony, I've spoken to him quite a few times, he seems like a genuine guy. He's got skin in the game. The chairman has a big chunk of skin in the game. I can't see this being a lie or fraud. If you look at the photographs they're punting out, who's to say? If you are a wild illusionist, maybe, you'd say they're all faked up, those photographs, like Pete said on WhatsApp.
But that was a joke.
Yeah, it was a joke. I know. Yeah. But let's be honest. We can see things are going on in on there, and they're very near to. And they said, production is going to start in March quarter. But some people just sold yesterday. There's enough. Too many capital raises. They have to raise some more capital to close the financial condition.
So how much are they going to? Have they said how much they're going to raise?
I've no idea. Not. But I can't imagine it be. Like I said, all we can say is this. I know operationally they're 80% done on the ground. It's complete. The guys all hold skin in the game. I don't think they want to, dilute too much. I think it's something to do with financial foreign exchange change, because the dollar's weakened massively since Biden's come in, and that's made all commodities pretty much more affordable against other currencies, and so you can buy more of it. But is
this the only way for them to, is it a company that's 80% built on the ground, they're ready to start producing in a few months' time? Is going back to the shareholders the only way of them raising short-term money to get them?
Well, quickly, yes, because the funding document that funding they put together there, that's taken months and months and months, and all it is that they said the model is now slightly different from the reality. And so they've had to change, and it's dragged on. And it's
going to have to be pretty big then, isn't it? We're not talking, small change here.
No. I just think it's just to bridge the gap into whatever it is has changed. I don't think it's a gap. They're still going to get the same amount of funding, I believe. So it's not going to be a huge amount, I don't reckon.
The whole process of doing another release of shares costs money, doesn't it?
Yes, but there are
costs associated with generating this cash that if they just stick it on a credit card or something, it'd be fine.
Yeah. I don't know if they've got a Salt Lake Potash credit card. That's the trouble, see, because when you're not generating any cash at the moment, and you talk about resource companies, it's quite a risky business, and so you can't just take out. You can't just say, "I'll put on the credit card there," but also they won't do an offer to shareholders now, because that also complicates the issue. The fastest way of getting it done is just going to institutions or something like that, and they just get it done. I can't see it being a lot more,
But the frustrating thing of the RNS that came out on Friday was just the ambiguity of it and the uncertainty, because that's a bit like, I know they can't say too much because obviously there's the fundraise involved and all the rest of it, but I don't know, the way it's worded, and you can see why some people did, obviously, or quite a few people did panic and sell. And I thought about it, but I thought, no, I'll hold. And my biggest thing really was the chairman and Tony, the CEO's they've got a big chunk of cash themselves. It's a big chunk, and no matter how rich you are, that's still a big chunk. I can't remember how many millions it was.
The chairman got 5-6 million quid worth.
Yeah, and even if I don't know what he's worth, whatever, but that's still a chunk of money in it to be like, the pub.
Well, this is the thing.
I'm thinking, but I just felt the RNS was a little bit ambiguous, or a little bit kind of vague, and that breeds uncertainty, doesn't it? Which isn't good. And then the other thing, it being listed on 2 stock exchanges and it can hold in Australia, but it can't hold here, is ridiculous.
Yeah. No, listen, but part of me, I understand that. It's annoying. Dual listing, that's one of Paddy's queries there. But when you get a dual listing, on the ASX in Australia, it's standard practice to halt, which is I think, is what we should be doing. We should adopt that practice. When you're raising money, they halt. You can't trade the stock anymore, because generally, 90-odd% of fundraisers happen below the share price, And if the share price stops dropping on rumour that there's a fundraising going on, then what happens is you have to, issue a share price lower than that. So it's a downward spiral, So if you halt the trading. But you can't do that on AIM unless there's a serious problem with the company, or there's financial irregularity, or you're late producing your report, your financial results. You can't do it. It's not a function on AIM to do that. And I think
it's a takeover situation.
Yeah, unless it's a special purpose. But just raising money, raising capital is not the point.
But in the meantime, could they not have released an RNS in the UK with a bit more, at least at the same time?
Yeah, saying what?
Well, just saying, chill your beans. What's wrong with you?
Yeah, okay.
Chill out.
Yeah, exactly. No, but this is the difference. This is what I think. So I'm not selling anything. So I think when you... there's 3 reasons why you should sell a video recently. One of them is the story change. And in my mind, the story hasn't changed yet. I'm talking about pretty much what they're going to be generating. And let's be honest, March is still going to be producing in March. To me, that isn't a change. That's a major reason why I'm holding this so close to generating good amounts of cash. 60 million free cash flow, EBITDA pretty much every year, just on one lake. And that will see the share price double from here on just very low, 5 times EBITDA. So, to me, I think we'll still get a good return here. That's the main story. That hasn't changed in my mind. That's why I think holding sometimes, rather than having a knee-jerk reaction and selling, is what I've done in the past, and I think it's not the way forward. I think if it's a business, it's a business. Invest in a business. Is the business changing? No. If you were running this business and you had no other option to do that, it's the fastest way to raise some money. You're still doing what you said you're going to be doing. Okay, this fundraise wasn't expected. I don't believe people said Tony lied. I don't believe he did lie. I believe he completely thought he'd get the financial close by the end of November. It hasn't happened as he thought, so he'd had to go back to the market. And I'm sure he will say, apology. I've asked him to come on the podcast and talk about it, but he will hopefully, after it's closed, this fundraise, and talk about it. And I'm sure he'll be saying, listen, I didn't want to do that, and apologise, because I think he's a genuine guy. But I just think it's a difference between, if you want to get out, get out. But I think there's still plenty of upside here. And rather than try and time it and say, I'll get out now and maybe rebuy, because I saw someone on YouTube said that to me recently. He said, I sold Polarin recently, about a year back, hoping to time it and get back in. I missed the timing, and I took my mind off it, looked at something else, and I can see now it's nearly doubled or tripled from where I last sold it at. So time in the market and time in the market is hard. And I think sometimes if you pick the right company, what is the right company? Who knows? But a sustainable rise, I think sticking with it is better than just jumping in and out. And
And do you think, what was it down by yesterday on Friday?
13%, say?
30%. So do you think that's it kind of in the price now, or do you think that will go lower?
Crystal ball time.
Yeah, I'm hoping the fundraise will be around... It's funny, I had someone say to me, the fundraise is at 27.5 pence. A mate of mine just had an email, who's a shareholder. I said, what? An email from who? I said, that's above the current market price. And it was the last fundraise, that was, the 27.5 pence.
Yeah.
So where is it? And then I said, who? What email? And he came at me, ignore that. That was the last fundraise. Who talking about? I thought you were full. But no, it was down 13.5%. I don't know. We got 3 days of uncertainty, but hopefully that, I just think it's just a bit of a delay. It may go down a bit further, but I don't think if you look at it, they're still going to be generating 60 million of EBITDA start of, next year. How far can it drop? It's going to be a bargain. The thing is, people like bargains in the market. People have fear of missing out. So where you get people selling, the sellers will dry up, the panicky boys will dry up, I think. The people panicking, jumping out, "Oh, he's a fraud! Go out! It's going to the floor!" Those people will get out and it'll calm down a bit, I think, and people think, hang on, this is a bit of a bargain here, this could double this time next year. So I think obviously bargain hunters will come back in. So who knows? That's the market, isn't it? It's a buyers and sellers market. Who knows? But I can't see it going too far. What's annoying is, like you say, it's pointless almost halting on one exchange when you can sell on another exchange, because it doesn't help anything at all. So, and it's going to make it harder for them to do the fundraise. So the faster they get the fundraiser away, the better, because they don't want the price to drift. But it may even get to the stage where they've got supportive, shareholders. Listen, I think the chairman is a company. He got another company, came in last time the fundraise, took a big chunk. I think he could do that again if it's just a stopgap, and he wouldn't mind doing that at a premium if it's a small premium, sure. So who knows where it'll be, So.
But weren't the wheels being in motion already?
Yeah.
So like the fundraisers already probably happened.
Should happen.
Yeah, exactly. So I assume most of the people buying here will be institutions or big shareholders who won't be selling. They'll be sticky holders. So it's fun. But this is the thing. Again, the course of business never runs smooth, and you've got to take the bumpy path. Sometimes you get that naked beach. Yes,
there we go.
It's just always that sinking feeling when I can't remember the last time an RNS came in and it was like good news. Like,
what do you mean? Escape Hunt's last RNS, how well they're trading, and in fact, they get at home gaming now is like an EBITDA of one site on its own. So they're still selling those. I
want one of those RNSs that comes out and goes, "Yeah, we've invented the cure for cancer." And somebody,
why can I never have one of those? You're not going to get that from Escape Hunt.
You're not going to get that from Escape Hunt.
No, they're not in that field, Pad.
Why are they not working on that?
No, I always remember Harry Hill's gag. I always loved that. I thought about it the other day. He said, "I don't know about you, but every time I go into a cancer research shop, I don't see a lot of research going on into cancer. All I see is some old ladies folding jumpers and putting books away and stuff." He said, no wonder they haven't found a cure. But let's go into Paddy's queries, shall we?
Yes.
The first one is, what the F's going on with GFIN? You punted that out, then he said, that's a question for tomorrow. But I don't think it was initially, was
they're
it, Paddy?
fundraising, aren't they?
No, they're not. No, but John came on the podcast. Paddy, stop saying that. No, they're not. They don't need to fundraise. They've got $1 million quid.
Why does it keep on going down?
1.4 million quid worth of warrants. Because there's no news. And this, again, you get Paddy panickers. I can call you Paddy the Panicker. You're a bit like that.
I'm not panicking. I just find it frustrating.
And you hate being called a panic.
There's no reason why that share price shouldn't be going up.
Let me say one thing, right? You panic, but you hate to be called a panicker, and panickers do, because it's close to them, it's truthful, and the truth hurts.
I'm not panicking. I've just lost a lot of money on shares like this that slowly drip down over months.
You've got to look at the market cap of this. It's like 27 million market cap, right? They just signed the third year with, they got all the biggest brands who want to get into esports. They signed up to them. This isn't their hot side as well. Was growing quickly, and I guarantee. I just think. It's lack of new. People have asked me 3 times, what's going on with GFIN, right? And it's only dropped about 10, 15%. People just, calm down. If you look at the chart, it's an uptrend. It's good. It's fine. Calm down.
Paddy, where you're saying, like, this share price should be going up, well, are you buying? No. So why are you expecting other people to buy?
Well, they're probably not at 86p in cash like me.
No, but, all right, if you had more than 86p, would you be buying?
Yeah, like I that's one of the stocks I've been looking at, thinking like there's no reason.
I would as well.
This company's put itself up for sale. It's in the short term there should be a decent upside. In the long term, it's obviously going to work. Like this, I just find it frustrating that
shares about you. But let me say one thing. You said exactly the same about Escape Hunt at 7 pence. Why people are buying there? If people know this, why are they buying? And now we're at 17 pence. And I said, listen, and do you know what? Look at the volume going through this, and this will cover off another of your questions as well. The volume now going through Escape, and in fact 4 times as much it was when I was talking about it at 7 pence, or in fact 6.75 pence. I talked about when it was 5 million market cap. So people do not buy when it's quiet. Most private investors do not make good money on stock markets. They chase shares because they don't have time to research. A lot of them don't want to research, can't be bothered. But they just chase, they rely on tips and stuff. But it happens. When it gets going, people start buying. That's the thing. It's like people.
This is probably the bigger question. Why aren't why aren't like these big institutions looking into these opportunities? Why is it left to a guy in his garage in Southampton?
No, because these guys, the institutions, Paddy, generally, honestly, it just, and also there are institutions holding Gfinity. There's Canaccord, you can't get bigger than them. They are holding it. They're not going to they own like these companies, about 1,000 companies. They're not going to chuck all their billions into one company. That's not how they work. And also, most institutions will not touch anything. And this is across the board rule, pretty much. Honestly, the bigger ones, unless it's worth, they would hardly look at it below, 100 million. But if it gets 100 million, they probably start looking at it. So, and these big companies, they don't need big returns. They're doing like 10% off each company they get. That's good for them. It's a lot of money for them. So.
And Pads, can I also just say as well? You look at where YouTube and Apple started.
Where is it? In a garage in Southampton?
In a garage. Well, maybe not in Southampton, but in garages.
Yeah.
No, but I'm not saying Justin's going to be the next Apple, but...
The thing is, Pat, listen, I guarantee all you've had is a lack of news. And it's still, to a certain extent, a news-driven stock, even though they're heading towards profitability, and I believe that. The fast-growing side of the business, the digital media side, will be hugely profitable, massive margins, right? And that's getting there very quickly, I think, faster than they think. But at the moment, lack of news, and a couple of people have asked me what's happening with GFIN. You're about the fifth panicker I've had this week ask me about it, right? And see, I'm not panicking. I'm not panicking! So I've said, listen, it's a lack of news, and there's lack of patience on the behalf of some investors, private investors, jumping out, looking at the next shiny thing that's being ramped to hell. So they'll prefer to follow someone on Twitter with some kind of superhero, picture, an unmade name, ramping a stock, rather than just have a bit of patience and, keep investing in a decent business that's improving in a very hot sector. Now, in my mind, at 27 million market cap, this is ridiculous, and they'll be easy over 100 million if they keep doing what they're doing, I think, in the next couple of years, the next 12 months, I think. I think, honestly, next year, they've really... This business has come from nowhere to 2 million in a year. It's going to be highly profitable, and then it's growing at double-digit percentage growth. So just have a bit... we should put this down almost like a diary. Maybe Steve should be the diarist, and put this down, because you've said this about other companies that when they were quiet, and you said, well, why isn't everyone else jumping in here? Because that's the thing about investing. But not everyone has that. No, but not everyone has that idea straight away. This is good, and does the research. Not everyone does that. Most people can't bother to do research. They just want to say, "Oh, he's quite good. I'll just follow him." That's what most people do. So, and again, you say, "Why is this?"
And a lot of private investors will, if they got into Gfinity at 2.5p, whatever, they've got up to 4p, 3.5p. They're sort of like they'll cash out, because they're not interested in the long term.
Yeah. And I've seen
about traders, but
Again, I said, that guy's a Plarian, There's plenty of people who'll take like a 50%, which is decent, and they get out. And that's it. And they look back and if I'd held into that, on 300%. I said, no, you didn't, did you? Because there was lack of news and you got bored and you sold. So there's lots of people do that all the time. Lack of news. Don't sell. It's not a reason to sell. I keep saying that. Reason to sell. Impatience is not a reason to sell. If the main story is intact, hold on. If the share price is going sideways, hold on, because value generation is happening. Sooner or later, the share price will catch up, and especially in esports. It's not going to need quieter esports for the next 5-10 years. Like I said, my kids right now, all they do is watch gamers or play games, and that's all they do. And
go back to the Salt Lake Potash and that thing of like if the story changes. So this week coming up, we'll obviously get a bit more confirmation and clarity about the fundraise, what level we're at, whatever. What could be the change that would make you kind of go, oh, hold on, the story has now changed? Like, if it was a massive discount and there was a huge dilution, would that change the story? Well, it doesn't. That changes. That doesn't.
No, I have to see, but no. If the story to me is the cash generation and the value they're at now. If they double their market cap in shares next week, then of course that changes the story, because whereas you'd say the year's production would make them worth say 300 million. And it's not now you are valued at 300 million. And they think, well, hang on a sec, that's not as good. If the fundamentals of the story change, that's the story changed, and I'd get out. But I don't believe that's going to happen. And like I said, there's 9 lakes they've got there, and so that would put the company even on 3 lakes, even at a million tons of SOP a year off 3 lakes, which they're aiming to do. That would make this company a £1 billion company, and they're not going to. They don't need. And I said, Tony's plan, he said, this is the plan. And to be honest, if you listen to the last podcast, I said to him, I saw someone dump recently, Tony, a shareholder, because he said you're doing a lot of fundraising. That's because we wanted to get as much of this done as possible and not have to wait for a large amount of debt. So we've done a lot through equity. But that means we brought our debt level down to 138 million they need. And he said, and the plan is now to not raise again. I don't want to raise again. I want to go now to the first period of production. The cash flow from that will fund other lakes, and that's the way we go. And that's how you build value. And he said, that's the plan. Now, he didn't say it's definitely going to happen. He said, that's the plan. And sometimes plans change a bit. So he's not stupid. He didn't say, no, we're never going to raise again. If you listen back to it, he said, that's the plan. He said, that's the plan.
Sure. So a change in that and massive dilution would be a reason to sell. And then equally, I suppose, if some of the offtake agreements fail to materialise or whatever, that would be a reason. But
And also, I hold a decent chunk of these stock, and I just can't get out in one sell. So that's the reason why I've gone. I hold small caps, and I can't just sell in one chunk to get out. So I have to pick stocks now that I'm confident will rise up the value chain to the point where they become sort of triple-digit market caps or close to even $1 billion, to where I can get out quite easily, and liquidity's there for me to get out. And that's another reason why institutions don't get in on these small companies. They can't get out. If something goes wrong, they're not talking about, if something goes wrong with a big cap company they hold, they can get out for 10, 20% down. If something goes out on these companies, they don't. They can't get out at all. They don't 50, 60%.
I know how they feel.
Yeah, okay. Paddy struggles to sell on Harry and Larry.
Why is Paddy's second question? First question was long. Why is there a big spread on the market? Again, it's a lack of interest. People will start getting more interest in this when the stock price goes up. It's like
come on, lads. There's no excuse on that one.
And if you are a market maker,
I'll send an email. Who can I send an email to?
Yeah, well, Mr. M&M, one of the market makers.
Investors@city.com.
Yeah, do that and say, come on. Well, listen, no, it's private investors, isn't it? So they'll say £1 a share. If you look at the average daily volume on the market, what is it? It's something like 40 grand. It's something ridiculous. Yeah, 41,000 shares is average volume. That's like 50 grand. That's not a lot, for a big. So. And that's why market makers don't want to hold shares of companies that are not traded on it, because if the share price goes down, they're stuck with them, because they're not. Because in highly traded liquid stocks, there's always people buying and selling. There's always people think they get a bargain on it. But in stocks that are not highly traded, they'll be left holding the baby to the bathwater, whatever the saying is. The bathwater rather than the baby. I don't know what it is. But,
holding the bathwater. Yeah.
Yeah. So they
throwing the baby out with the bathwater.
Yeah. So they want, if you want to buy shares on them, they want to have a bit of a profit straight away. They want to have a nice spread in there, and until they start churning that volume over, they won't bring that spread down. But it'll get there. Same with. Have you seen? Do you remember you were talking about the spread on Escape Hunt? Do you remember that? Now you don't talk about that anymore.
I don't. Yeah. It's an area I still don't really understand.
Well, now the volume.
Why am I paying Harry and Larry £12 to buy some shares, and someone else makes a cut along the way? Like, should it not just be like one fee you pay to buy stocks, and that's it, and that's just the price? Yeah.
Well, no, the market, isn't it? Who makes the market? Because you've got to be.
Why do we need that?
Because
it's not a market maker, is it?
Well, no, because if you don't, if you want to buy some stock, you have to have someone who's willing to sell that stock to a holder, not a market maker. So not an interim middleman. So, for example, us here now, if you want to buy some Escape Hunt shares, right, you'd have to go to Pete and Steve. Say, do you want to sell me some of these shares? Say, no. Oh, okay. Well, I want to sell some of these shares. Do you want these? No. Oh, okay. What I do, boys, and then, so you have to become a middleman, stand in the market, say, okay, listen, I'll take on and buy and sell shares. I'll make the market here, okay? You don't have to find someone and match the amount you want to buy with what you sell with somebody else exactly. I'll just buy and sell shares, and it'll be trans. That's how it works. But yet you have to take on risk. If you're taking a share that's hardly traded at all, you think, well, hang on, it's not really trading that share. No.
So does Harry and Larry own that then?
No, there's market makers. There's affiliated, licensed market makers on the London Stock Exchange, and it goes through them. Those guys, Right. And that probably links into Paddy's fourth question here, which is how do dual listings work? Essentially, the reason why they do it is liquidity. That's one of the reasons. Like I said, problems with liquidity is an issue, and greater access to capital. Because of course, the more investors, more people research the stock and get involved in the stock, more brokers. It makes it a bit more complicated. It also makes it a bit more expensive, of course, to listing. Now, I don't know if you look at the market cap. If you look at, for example, Salt Lake Potash in Australia, and then you convert the price, it should be very much similar to the price over here in pounds. It should be. If not, arbitrage goes on, and people take advantage of that. So it equals it up. So the shares, a lot of it's done electronically, isn't it, these days? So I'm assuming the market makers are connected electronically. So it's all like that. I don't understand how they work out who has half. It's not a case of Australia have half the shares and Britain have half the shares. I think it's electronic, so they're all linked into a pool. So I don't know how that works, but
if you're in Australia, you can buy British shares, can't you? Well, I don't understand why it's necessary.
But they generally a company will list culturally in where it's based, and then they'll go for a bigger market where it's more liquidity. Like some of the big miners in Canada, for example, listed in the US New York Stock Exchange and in Canada, or you get other. But I don't understand how the actual the physical. But are shares actual real things now? They're all digital, aren't they? Anyway, so it's like it's not hard to keep a track on it computer wise. So.
Equally, like, just why do you need market makers now? Like, it's just like you need need a company that runs the service, but you don't need someone who actually runs the market. Like,
I think it's
no, but it's all. I mean, market makers are automated, aren't they?
Yeah, I assume so.
They live in caves underneath the sea.
Okay. Yeah. And do you know what? And the fourth question was, what am I wearing? And do you know what? Oddly, I just on LinkedIn right now, and what's staring at me is Harry Styles in a dress, and Paddy.
That was just more for a bit of fun, really. That one, that was a serious shares question. You've got
a bit of Harry Styles about you, I think. Do you see that? I saw an excellent picture of Harry Styles. He was at an award ceremony, and he was dressed he had pearls on and a handbag, and someone said, when you go in your nans and you poo your pants and you've got no change of clothes in? That's him there. He's wearing his nan's clothes to a premiere. He didn't say poo, but right. And it did look like that. He came straight from his nan's. He'd pooed his pants, and he's like, I've got some clothes there. Put these on for your premiere. Very smart.
What's the reason? I like how he doesn't seem to care.
Yeah, he does seem to care. That's the whole thing. He wants other people to care, doesn't he?
What was the reason for wearing a nan's dress?
Well, because he's Harry Styles. He wants to be cutting edge. He wants headlines. It's about he's in the business. He's in the business of promotion, isn't he?
Where can I get this dress for Christmas?
Yeah, exactly. So anyway, last final thing. We're up to the last 10 minutes. Should we do guess the share price? We've done escape hunt. We've done what's the particular knock, isn't it? So look at that, Paddy, 40 pence. SO4. Oh, he said October. Me December. It's coming up. Pete January. Steve March.
Good.
Escape hunt. When we hit 20 pence, we're almost there. What are we at? What are we at now? What are we at? 16 and a half pence. 16 it'll get there. We're opening up. They're going to be opening Cheltenham as soon as they're pretty much. I think Leeds, Bristol, Birmingham, Manchester are in tier 3. The rest of them are in tier 2. They're online apparently. At home games are going very well, but they'll be opening up Cheltenham. I assume on next week on Wednesday. Is it 3rd? And I think Watford's not far off because I saw a press release on that. So Watford. So anyway, so when will it hit 20 pence? Paddy's gone with March. He's been a bit more conservative there. I've gone with January. I think it could be next month. Pete, April. Steve, February. Ooh. Okay, let's go at Gfinity then, right? Paddy, 7 pence. So Gfinity, 7 pence. Where are we at the moment?
What's it now?
We're at 3.3. Well, that's a double there. So 3.3.
He's talking a coin there.
Remember, we've had very little news, right? For some reason, John didn't come on the podcast without being news about esports. I think we just do it like where the pendulum swings sometimes. I think we just do something, and I think John's he's a very organised guy. He knows what he's doing. Just trust John.
Do you think because obviously we know Gfinity does well, has done well in the lockdown. Do you think it'll bloom even more so out of the lockdown?
Yeah, but I think it's like all these things like Zoom, and it's not started a new trend. It's accelerated a trend that was already happening, isn't it? So esports was always growing before the lockdown, but the lockdown just accelerated that that trend. So yeah, I think it'll still do well. People started playing esports and liking it, not just put it down now and stop, are they? And like I said, there's a whole generation of kids. That's all they do. So we got a tsunami. And again, it's the same with the EVs. We've got to get exposed to EV guys because, this is a tsunami here riding the wave of a trend. The EV trend is massive, and esports, of course, is a big trend. It's not going to be as big as EV, but it's big, So anyway, Paddy, 7 pence. What do you reckon?
How long until it doubles?
Yes.
2022.
Right, I put it down. 2022. What date there?
March.
March 2022. Okay, that's right. I'll go with. Let me say. I reckon Santa Rally. Let me tell you one thing. Santa Rally. Paddy's asking the second year. Paddy, you are a panicker. So when is Santa Rally happening? You said this last year.
Tell me things are going to get better and they don't.
You said this last year, but when is Santa Rally? I remember you asking it. I did try and search for it on WhatsApp, but I remember you saying that Santa Rally is the last 5 days, training days of December, and the first 2 days of thing. There's been a 75% chance of it happening. All right, so the fact it didn't happen last year is a good omen for this year. But anyway, I reckon January. I'm going with January. Pete.
March 2021.
March. I'll just put March down. That's next March. Stephen.
I'm going to go with June 21.
Oh, you like June, do you? All right. Right, June. Right, we'll leave it there. Should we go with there's Polari in there, but that's for hitting £1. I think we'll do that next week. We'll leave that there. Anything else, boys? Anything happening? I've been watching TV reviews. I've been watching that thing you said. I sort of like it. I sort of don't. What's it called? Schitt's Creek. I know what you mean.
Oh yeah.
I sort of like it. Sort of don't. I've tried my best, but
It's a bit. It's funny. It
is quite funny. It's quite camp. I like things a bit more real. But like I say, it's one of those things. 20 minutes on a treadmill in the morning. I watch it and it's fine, you know. But anything else you've been watching this week's? Anything, books or TV's recommendations at the end? Let's finish it off with a nice recommendation.
Well, something to watch today will be Wales England rugby.
Oh yeah.
Oh yeah. What time's that on, Pete?
Get murdered.
Don't remind us, please.
5 o'clock, is it?
Oh, I'm working.
It's going to be a rugby score, that one.
The only thing the Welsh have in their favour is when England's been this cocky, they've generally lost. You know, they've been too blasé, they've just steamrolled Wales, and they haven't done it. I mean, the last time we actually went out to a pub and watched me, Pete, and Nick McCracken, do you remember that? That was the foregone conclusion. That was the foregone conclusion for England. Oh, it's so easy. I saw people on Twitter said, someone said actually, it's as fast as it's easy as £100 live win. He put a bet on England, and he got steamrolled, and it didn't play out. See, the plan doesn't play out sometimes. But
well, go on.
It's at 4 o'clock, just to clarify time.
Oh, it's 4 o'clock, is it?
Or is that the score? 16-0.
No, it's at 4 o'clock.
More than that.
Yeah.
Well, if anyone's interested, I'm going to be doing a live Facebook with Santa for Merthyr Tydfil later this evening.
I'm assuming that's trumped Wales England in the ratings, Steve.
I think so, definitely.
Who's covering that? Is it Sky and BBC and all that? Is it?
Me? Yeah, it's me.
If you had to write down
live with Santa for Merthyr Tydfil.
if you had to write down your ideal Christmas show, you know, Stevie Jingles, Santa Claus, Merthyr Tydfil. It doesn't get any better than that, does it? And the COVID.
I'm not actually hosting it. It's
and there's a COVID capital of the UK as well, and Santa's going there. Is it safe? I don't think we should let Santa go to the COVID capital of the UK.
Well, we've actually already been to Merthyr. It's actually been broadcast from Cardiff. But
all right, so you got out quickly. That's right.
Yeah, pretty much. So we've done all our pre-records, and it's then we're doing the live stuff in Cardiff.
What is it for, Steve? Like the city of Merthyr?
It is for the city.
It's not a city of Merthyr. It's not a city.
It's their virtual light switch on, but it's not a light switch on really. It's more just like a Santa Live, just questions for kids to get involved and talk to Santa.
Oh God, is Santa Welsh?
Yeah. Well, no. But you know what? You won't go back to the Gurnos after this. If you've been there once, I tell you what, the Gurnos is a housing estate on the Merthyr, right? And you would not believe it. If you got, it's a different.
Last week, actually.
It's a different world. And last time I went there, it was like we used to go to Cheltenham and horse racing. We tried to normally cut the train to Cheltenham with the boys, and we tried to get a bus. And we went by Merthyr to this club in the middle of the Gurnos where they had bars on the windows. And you realise, oh, this is nice. And you literally would not want to be in this, literally park your car up. It's not 10 years old or something. The wheels are gone within a few seconds. And I don't want to but that's what Merthyr had the highest infection rate in the country for a while.
It still has at the moment. They've gone into the mass testing like Liverpool now.
Yeah, I don't want to, cast aspersions, but I don't think they cared about washing and stuff. They cuddle a lot with each other, and
Right. Okay.
So anyway, Santa Live, 6 o'clock tonight.
I don't think he will be alive. I think he'll be already dead after.
You just told us it's pre-recorded.
The light switch on's pre-recorded.
There's that cracking light switch on. You see that on Twitter just now? There's two counsellors counting down, and someone switched the lights on about 5 seconds. They're just counting down and press the button. That's perfect. So,
do you know what? But we actually had the exact reverse opposites when we went to pre-record the lights of Merthyr, because it was the lights came on like 5 seconds after we did the button push on, and then they jammed. Then they wouldn't turn off, so we had to do a bit of magic in the video editing.
Turn the lights off, man! Turn them off!
If you look carefully, you can see a van in the background jump across the screen for the 5 seconds, so I've had to cut it.
Yeah, turn the light off! Brilliant. They can't afford it, have you? Right then.
I'm tempted to watch it now.
Yeah. So where is it, Steve? Live across the world on Facebook,
Steve,
yeah?
you've got to release the original one. That's the one that will go viral.
Yeah, exactly. Good point.
If it wasn't my Korean, I probably would, but no.
Korean? Right.
But anyway, we seem to have glossed over the rugby. Good luck, Wales.
Yes, we need it. I think it'll be close, though, honestly, because you English getting too cocky. You think beat everyone, but don't worry.
It's very much the English way, isn't it?
Yeah, it is. Yeah.
I know people say we're arrogant. I don't think we're brilliant.
Oh, there we are.
Wow.
That sums it up, doesn't it? Lovely. Have a nice weekend. Speak to you next week.
Bye.
The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.